Okay, that's gold. That's the daily. Gold disappointed a bit in the sense that it didn't give us really a run above the previous high here, and I did warn you. You remember when we were looking at the momentum here in the last video. During the past week, I was warning you I don't like the fact that the momentum is looking so weak. I was cautioning you to the possibility that it might fail, that it might not deliver, and as you can see, it reversed here on Friday's stocks took off. It reversed, but in itself, this is not a signal, if you like, for the end of the rally. I would be very, very surprised. I would imagine that in the worst case, we do have a failure fifth, a failure in the sense that it didn't take the previous high, it didn't exceed the previous high here. That is a sign of weakness, but to go from concluding, from observing that this is a failure to concluding that it's going down there, I think it's a big jump. I wouldn't rush to do that. We have examined the US dollar South African run a few minutes ago. We saw that forex pair is continuing to support strength in the precious metals. There are plenty of other signs that the commodities in general, commodity sector is in a revival mode. So I think it's a question here of seeing gold, silver probably going through further consolidation. There is another possibility here apart from the failure. Okay, if that is a 1, 2, 3, 4, 5 failure, fine, then you're dealing with a move that ended basically here. What's going to happen now is a consolidation, further consolidation. If that is to be taken as a 1-2 or 1-2, you can imagine this is probably another 1-2. Okay, even if it is an A, B, you can still work with the option that that could be a 1-2. Okay, what would look like a game changer move would be a break through the 1,300 and basically beginning to sag and sort of losing momentum in a serious way. Then I would imagine we are targeting the floor right here at 1,200. And longer term, in the next several weeks, I really do not like to see 1,200 breaking. 1,200 breaking will set a pretty negative tone to the entire structure. It will definitely threaten a revisit. Yes, threaten a revisit to the floor at 1050. Now we are very far from that. I wouldn't rush to use too much doom and gloom language at this point. It is not warranted. We are looking at potentially consolidation in this zone. The other alternative that I just want to quickly mention here that is unlikely in my opinion is that the fourth wave is not done, meaning that we have our 1, 2, we have our 3, but the fourth wave did not end here. It is still ongoing, and that's the reason why it slumped in this manner, that the fourth wave will be over in a few days and then it will go up. Of course, this is something that I cannot foretell. I can probably conclude that we have a fourth wave ongoing once I have the fifth done. Okay, then I can go back and see how it fits, and if it looks perfectly in place to use this structure of a 1, 2, 3, 4, 5, then fine. But at this point in time, it is it's not prudent to try to conclude that up front. Okay, so what you should take away from all this analysis at this point is that the 1,300 remains a critical level for the bullish advance here, and that's what I would say at this point concerning gold priced in US dollars. Here's silver in US dollars. That's the daily, and also here it reversed, and again we can make a case that we had a failure fifth. Well, it is not so easy to talk about a failure because, strictly speaking, if you look at what happened here, there was a spike, a brief spike above the previous high here, and it did fail to run above this spike. Yes, and if you adhere to the strict 1, 2, 1, 2, 3, 4 5. Well, yeah, you can argue that you have a failure here. This is using the candlestick, but if you use a close base only line style, you can see that it did record a new high. Okay, I often mention that for Mr. Elliott himself, using close only charts was a thing that was acceptable to him. So if it was acceptable to him, should be acceptable also to us. And this could work as a 1, 2, and a perfectly 1, 2, 3, 4, 5. Okay, you see 5 legs from this structure. So in the case of silver, which has been clearer all along, and it as the bull developed here, I think that it is absolutely critical that it stays above 18. Okay, I really would not like to see in terms of the bullish interpretation here, silver breaking under 18. That will definitely weaken the structure and would call for major reassessment of the wave count here. So what would I make out of this jump? Well, look, in terms of time, it is quite possible to relate what you see here to what happened here. It's briefer on the time scale, and of course on the price scale it is disappointing because it didn't run above this level. But the structure is there, as we just examined on the close basis, that the chart can yield 5-wave run from this spot. So let's stick with that at this point, and we have one level, critical level to watch. That's the level right here at 18. Anything like that stays above 19, 1910, going sideways is bullish, is a consolidation, it's a preparation for going higher. Do not be discouraged. If you are a bull, this is still supporting our case that there'll be further upside. Breaking in this way, let's put it, let me just paint a few scenarios for you here. Suppose we see something like that. It drops to 1910 or so, it bounces back and it drops again. But when it reaches 18, it bounces strongly. That is super bullish. This will be super bullish. That will really reconfirm strongly the bullish trend. Now, cracking through that, that's no good. That's bad. That's bad news. Okay, may not necessarily call the end of the entire bull move developing here, but that a move like that would mean that we are going to see a correction lasting for several months. Okay, a move like that would say everything is on track and momentum is still quite strong. Silver should continue to look high in the weeks and months to come without a very lengthy correction. Okay, this is silver priced in euro. That's the daily, and also here you can see the potential of a failure to take the previous high here. We already witnessed what we considered a possible failure here in this interpretation. We worked with a 1, 2, 1, 2, 1, 2, 3, 4, 5. We said possible failure, and here's another one. So of course all of this is something that indicates some weakness, unless what we really have to do, we have to encapsulate. Let me show you here. You see what we have to do, we have to treat all of that as a fourth wave. We have to simplify it. Just take this as 1, 2, take this as 3, and say that all what you see here is a fourth wave. Then we get rid of the notion of failures. Okay, and there is nothing terribly definitive about the failure idea, because if there are 2 subsequent possible failures occurred, what should happen now is something like that. Now the critical level here is obviously at around 15.5, 15.7. And if the market is indeed signaling terrible weakness, it's going to crack through that like nothing. Okay, but I'm not going for this at this point. I think it is quite possible that it will hold ground around here. Okay, it will hold ground around here, and we should see it eventually recovering and going higher. The fourth wave, alternative that you see here is one that I already mentioned in the case of gold, that we will just go sideways, and this should be taken still as a fourth wave with the fifth yet to come.